Well, good morning. Welcome back to the Broadcast Retirement Network. This is BRN AM for Tuesday, June 18th, 2024. And our top story today, crafting future-ready technology roadmaps for business success. And joining me now to discuss this and a lot more are Tim Scott and Robert Holman of Enterprise Iron. Tim, so great to see you again. Robert, great to meet you. Thank you to both of you for joining us on the program this morning.
Thank you for having us, Jeffrey.
Thanks, Jeffrey. We appreciate the opportunity today, and as always, enjoy being with you and your audience.
Yeah, this is and Tim, I got to say, it's great to have you back on the program, and this is a continuing topic that I think in today's world you got to remain competitive. You got to keep your infrastructure, especially your technology infrastructure, up to date. What are some of the recent trends when you look at the retirement industry in terms of updating technology, updating infrastructure, staying current, being able to service your clients?
Yep. At Enterprise Iron, we work with a wide range of clients in both the private and the public sector, primarily retirement pension segments, but we also work in the broader FS world too. So as a result, we have a very broad exposure, and we see several trends among the clients that we serve, but I'll hit on just a couple that are hot right now. And while the reasons may differ, particularly between public and private sector, one trend that we see is this constant demand to evaluate your current technology and operations for the plan providers. It might be because of increasing cost of providing services in a market where fees are being compressed. It might be consolidation in the industry, where firms are buying other businesses. Or it might be the introduction of these technology disruptors that make claims of better automation and reduced human interaction. I took a look back at a listing of the top 65 record keepers from 2014, so just 10 years ago. And at least 20 of those firms have been acquired or merged in that 10-year period. So if you let that sink in for just a minute, fully 1/3 of the top record-keeping firms no longer exist in the same manner in just 10 short years. That pace is increasing with new announcements seemingly every other week or every other month. So, you couple that with concerns over cybersecurity, cloud adoption, and legacy modernization. Firms like ours are very busy helping clients map out their future technology strategy.
Yeah.
Go ahead.
I'm sorry. Go ahead, Tim.
I was going to say another trend that we've seen is the explosion of outsourcing, either technology or operations or both. On June 4th, I celebrated 40 years in this industry. When I first walked into that office in what was then called Diatron on June 4th of 1984, it was not uncommon for small firms, small administration shops to have a proprietary system. Those days are long gone in the private sector because the cost of keeping up with regulatory changes has turned it into a game of scale, size, and self-service. So, it feels like the world's a lot less personal these days than it was back then. I'm sure that's probably not the case everywhere, but while there's some state agencies that have proprietary systems, the number of vendors with platforms in that space has boomed in recent years too. So at Enterprise Iron, we have relationships with all of these vendors. And what we do is help our clients identify the ideal operating model for their unique situation. It's not a one-size-fits-all type of answer. It might be total outsourcing, partial outsourcing, managed services. Might be keeping the processing in-house, but leveraging vendor technology is the best approach, instead of bearing that cost and complexity of maintaining those proprietary platforms. So these trends are all great for firms like ours, though, because there's a constant demand for our advisory services.
Yeah, and I didn't mean to cut you off, Tim. I apologize for interrupting you. Robert, great to meet you. Thanks so much for coming on the program as well with Tim. One of the key terms in our industry, and I sense this is the same in the technology industry, is due diligence. You got to do due diligence in order to choose the best tech platform for services. How do you do that in a competitive industry like the retirement and the technology industry?
Well, first of all, why do you do it? And the reason is an organization that places a strong emphasis on, continuous market research and regulatory updates is going to stay competitive. And that's the end goal. You want to make sure that your name is up there with the industry leaders as we are doing, we're competitive and we've got the latest and greatest. So at Enterprise Iron, we regularly assess emerging trends and tools, and we adjust our consulting recommendation strategies accordingly. We attend industry conferences, participate in professional forums, and engage with policymakers. We also recommend that our companies conduct customer satisfaction surveys to make sure that they understand their client needs and preferences. And remember, your customers in the IT world are not just the participant-facing ones. They're also your business users. They're the ones who talk to the clients on a regular basis, and they understand what they're being, what's being asked for and what the clients want. So talking and having a close relationship with your business partners is going to be part of your due diligence strategy. So all of that demonstrates that that staying current and competitive is not just an IT initiative, it's a continuous investment in your people as well. And then the final point is organizations tend to get a little myopic sometimes. So if you try to do due diligence in-house for yourself, you may not understand what you don't know. Having a partner, a third party that comes in from the outside and performs health assessments and processing checks can help you identify areas that you didn't know about.
Yeah, you make a really good point, Robert. And I want to ask you a last question before we go to a commercial break. Tim talked about his experience in the industry and since 2014, some of that consolidation. What do you see? And I would consider that to be a disruption. Those are changes. But what do you see as big disruptors in our industry from a technological standpoint?
Well, from a technology standpoint, the biggest disruptors right now are really related to AI, RoboHelp, ChatGPT, and figuring out how you can implement those and integrate them with your offerings, whether it be investment advice or responding to the changing needs of people who are about to retire by giving them retirement advice, how they should invest, how they should make sure that their nest egg actually lasts throughout their retirement. These technologies are going to provide automated, scalable, and lower cost solutions, which is going to appeal to your younger tech savvy generation. On the other hand, your older people who are tending towards looking at retirement and packing it in basically and saying, okay, I've done my due. It's time to retire and enjoy my grandchildren. Those people are looking at holistic views of their financial situation. They don't just want to know how much money they have in their retirement account. They want to know how much are they going to get from Social Security, what other investments do they have, what other income can they count on, and they want their retirement advice to reflect all of that information, not just the single point of how much money do I have in my 401k plan. Now, disruptors are not just technology. You've got generational disruptors. Your iGen and Gen Zers want instant access. They want to do their mobile phones. They want to have a quick bit of information pushed to them. They don't necessarily want to go in and try to dig around and put a lot of thought into it. They want the company to reach out to them and prompt them of, hey, you need to look at doing this to your account. On the other hand, your older people, your boomers, your Gen X, and now we're getting towards the millennials, they're looking more towards wanting hands-on customer service. They want more people interaction. They may or may not be as comfortable with technology. They can be frustrated just by your simple voice response systems, because they want to get to a real person who can talk to them and get deeper than just what's my balance. So these diverse goals are forcing companies into new heights of flexibility in their service offerings to make sure that they satisfy all their clients rather than just focusing on one group. And the final disruptor is, of course, legislation. Secure Act 2.0 just came up a year or so ago. That's we at Enterprise Iron looked at the Secure Act legislation, and just looking at things that were going to require changes to the record keeping system and the way you did business, there were 147 different changes that were quite detailed, and it put out the possibility of introducing literally thousands of new plans that represent a new opportunity for businesses to pick up and start servicing and get more business on their bottom line. So you have to keep up, not just with your technology disruptors, you have to keep up with what's going on with legislation. And that's again where a partner can help you identify what needs to be, what is important and where you need to focus and what's likely to come out of left field and catch you off guard.
Well, certainly well said. Gentlemen, I need to take a very quick break. When we come back, we're going to talk about how IT managers, which is, I think, one of the toughest jobs out there, need to balance all of this. You're going to want to stay tuned right here on BRN AM. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device. Welcome back. We're joined this morning by Tim Scott and Robert Holman of Enterprise Iron. Tim, Robert, thanks so much for staying with us this morning. Really appreciate hanging around for segment number 2.
Absolutely. We're glad to be here.
Yeah, and really a fascinating discussion. Tim, you wanted to build off of something Robert has said about disruptors, and go ahead.
Yeah. So, Jeffrey, we've seen several firms, trying to introduce new technology disruptors in the industry through the years. Some have had more success than others. And in fact, we've seen some come and go after blowing through millions of dollars, but in addition to those, those types of firms, there's also a number of large SI firms working hard to break into this space and take advantage of that outsourcing trend that I mentioned earlier. So regarding outsourcing of any kind, of any level, my advice to clients is always read the fine print of the contracts so that you fully understand the expectations of you as the client. We've seen situations where the client maybe didn't do the proper due diligence. They didn't do quite as much as they should have. They didn't really get what they were expecting, and it creates frustration for both parties. So, another potentially successful model that we've seen has been to take a modular approach to technology rather than this kind of big bang type of conversion approach.
You make a really good point. And Tim, just to kind of follow up on that, and Robert made some really good points in the first segment about the disruption. I want to, and the importance of due diligence. It's tough to be an IT manager in today's world. It's a tough job. You've got a lot to balance: infrastructure, staff, a lot of decision making. How do you balance that? Do you need a partner to help you balance that and to bounce ideas off of and to share best practices?
Yeah, the average IT executive, they have so many headaches these days. I briefly mentioned earlier the issue of cybersecurity. Hardly a day goes by that we don't hear about another hack of a major firm. I probably have a half a dozen or so outstanding offers for monitoring services from all sorts of companies, financial services firms, AT&T, you name it. They're in my mailbox over here, and it only seems to be escalating, right? So I've heard it said that the number one goal of an IT executive is to not be the next name on the front page of the Wall Street Journal. So cloud adoption seems to be a panacea for a lot of organizations because of the inherent benefits that it can bring. But unfortunately, in a lot of cases, they're stuck with old legacy platforms that use languages like COBOL and Assembler, and those things are no longer being taught in schools, and the people that can program them have more gray hair than I have. So that's why we've really spent a lot of time and energy working on solutions to modernize these old legacy platforms for our clients to reduce their technical debt before it chokes their business.
Yeah, and I learned COBOL, so now you're making me feel real old Tim. But Robert, Tim brings up technical debt, and I want to ask you, talk about, can you define technical debt, and how much technical debt do you incur if you don't update your legacy systems and your infrastructure?
Well, technical debt is being incurred every single day because the industry is not standing still. New hardware is being put out, new software, new releases. So it's a significant issue for firms in the retirement industry because they may rely on outdated legacy systems. The debt manifests itself as increased operational cost, reduced efficiency, diminished capacities to integrate new technology. As we were talking about COBOL, and that's not the only technical debt, but yeah, it's harder to find COBOL programmers. They're becoming more expensive when you can find them. And where people want to integrate with databases, they want to integrate with new AI technologies. COBOL's not really built to do that very well, so it can be tough to do. Now, for example, these older systems, they may require manual processes that could be automated with newer technology. This manual process leads to higher labor cost and longer processing times. The older, outdated systems can pose security risk and make you vulnerable to being the next name on the front page of a data breach. And the longer that you delay modernization, the more costly and complex it's going to be to do. If you are constantly updating, then you've got a smaller lift. And you may end up spending the same amount of money over long term, but it's going to be far less disruptive to your company and to your people. The Japanese have a term called Kaizen, which means continuous small improvements. And the concept is they talk to the people who are actually doing the work, and they get recommendations on what small thing would make your job a little easier. And if you're doing these constantly, then you're doing small uplifts and not looking up one day and going, wow, I've got 10 years of technology debt that I now have to upgrade 20 systems at the same time, and they're all going to be major upgrades. And my entire IT budget this year just tripled, and I can't do anything else but the upgrade. So when you don't want to find yourself in that situation. What you want to do is upgrade as you're going. And like I said, it might not just be COBOL, it could be upgrading to the more current version of Java, more different architectures, anything along those lines. So when you have the technology debt, you've handicapped your efforts to be an industry leader and have those industry leading features. That can prevent new sales because your clients are looking for those industry leading features. And if you can't offer them, they're going to go to somebody who can. Yep. And your current customers are looking around going, my people want these new features, you can't offer them, so I'm going to go to your competitor. So your technology debt not only costs you, money and time when you actually have to do the update, it can impact your bottom line in loss of new business and loss of existing business.
So that begs the question, and you brought up the term cost benefit analysis. How do you do a cost benefit analysis on these types of modernization projects? You're doing them, if you follow the Kaizen, I think is the term you use, this modular continuous approach. How do you do that analysis to justify it? Because we all have a boss. We've got to go to the boss to get the budget approved. How do you do that CBA?
That's probably one of the hardest things that a manager and a vice president has to do, because as you say, you have to go to your C-suite and convince them to spend the money. The problem is it is very difficult to point to any one thing and say, if you spend this money, you will see an increase here. You'll see that we've reduced cost. If you're going to better technology, if you're going to automating manual processes, you can point to some reduced cost, but you have to make sure that your C-suite understands that you're providing tools to the rest of the company, to your business, to your marketing. And when you can when you provide those tools and you can offer those latest innovative technologies and features and functionality, then business will sell more. Your marketing and your salespeople will sell more. Customers will be more satisfied with the response they're getting from business. So you won't be able to go, look, our sales ticked up X% over the next 3 years because of what we did, but that's what happened. And it's just very hard to draw a one-to-one correlation there. So you have to modify your pitch to the C-suite to say, look, what I'm doing is helping the rest of the company increase our bottom line. So you're going to spend money on me so that they can make more money for you 2 years down the road, 3 years down the road, and we can continue to grow and meet your long-term financial goals. And that's what it's going to actually tie down to, is you have to show them how their long-term financial goals are going to be helped by the money they're going to spend on you, so that another portion of the organization can do better.
And Tim, I want to get last closing comments from you because, look, and congratulations on 40 years in the business. I don't know if I should be saying, I'm going to say congratulations, but close, all seriousness, close us out, because as Robert said, this is the hardest, that's the hardest job of an IT manager, is to sell the project or projects or components of a project above them, and to help C-suite folks who are very smart understand why this has to be done now and continuously.
Yeah, and so, Jeffrey, it's interesting because as we think about this idea of continuous improvement, I've seen companies budget differently, right? In some cases, they ignore this whole idea of annual upgrades and so forth. They only create upgrades and a major enhancement as a major project with special funding, and they have to go to all levels of management to get the approvals and so forth, while others establish an annual budget. They just say it's just part of our operating budget. We're going to be working on and improving our platforms, improving our technology every year as a part of our operating budget. We definitely believe that building that kind of discipline of budgeting for upgrades and enhancements and so forth, we definitely believe that that's the right approach.
Well,
and
go ahead.
Go ahead. I was going to say, we didn't really talk about things like agile development, which you could spend a whole session on that, or what the next regulatory change might be. At Enterprise Iron, we believe in the mission of the retirement and pension industry. So we're proud of the role that we played in helping millions of Americans successfully plan for retirement. We have the experience to help our clients navigate through these times and come out ahead. So whether it's creating operating models and technology roadmaps, vendor evaluations, system modernizations, and so forth, we're looking forward to what the future holds.
Yeah, and it's I think it's a bright future. I love that we're ending on the successes of the retirement industry. It's been, from everyone's point, from a lot of people's point of view, very successful, but it's imperfect. All systems are imperfect, and so therefore it needs continuous and iterative changes. Gentlemen, we're going to have to leave it there. Great to see you again, Tim. Robert, great to meet you. Thanks so much for joining us. We look forward to having you back on the program again very soon.
All right. Thanks, Jeffrey.
Look forward to it. Thank you.
Take care.
And that wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to? Drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest programming? Then check out our website. Hey, we're not back again tomorrow because of the Juneteenth holiday. We'll be back on Thursday for more BRNAM programming. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.